Good morning, everybody. Happy Monday. I hope you guys had a safe and wonderful weekend. Hey, Chad, Lorna, great to see y'all. Trader G, yeah, great trade on APLS for the mastery this morning. Hey, Scott, good to see ya. So I used to do these as Sunday updates to kind of prep myself going into the trading week. But my daughter does not take naps anymore, and so it kind of messed up my time of day to be able to do that. So I've switched it to where we're now going to do them on Monday mornings. Today is going to be at 9:30 only because I have a room session that I am helping cover later today. But otherwise, I plan to do this normally at 10 a.m. Central on Mondays. So please feel free to join me each Monday. We'll talk about how the market opened. We'll set a game plan for the week, things to be mindful of. We'll talk about the $500 challenge. And of course, if there's any time at the end to answer questions, or if you have questions throughout, certainly I am always more than happy to answer them. And if I don't know the answer, right, maybe it's a topic I'm not as um, good on, like futures, for example, that's something I'm still learning myself, then I'm happy to point you in the right direction. So good to see you. Lorna, it happens, right? Homanos King, great to see y'all. Toby, you as well. So let's start with the market this morning. So far, pretty decent open. This actually shouldn't be too surprising. The reason why is because we do have a shortened trading week this week. So, what are some of the characteristics of a shortened holiday trading week like this? Well, the first characteristic is it's not uncommon to chop and grind higher to the upside. And certainly, as we attempt to go back into a bullish trend here on SPX on the daily chart, right? We're seeing that in action. It's not necessarily a huge daily range that we have so far. Of course, it could certainly end that way into the close of market. But as of right now, you can see we actually opened technically a little bit lower, but right at 5 and 10-minute 10 period simple moving average support levels, we bounced up. We had a re-entry here on the 5-minute for those of you who like to be a little aggressive on the start of a Monday. And then we're popping a little bit higher from there. But overall, certainly a bullish trend that you can see. When you zoom out, I'll zoom out on the 5-minute chart just to show you guys, but both time frames on the 5 and 10-minute chart have plenty of room for momentum to continue higher. So even though we're zoomed in and it looks like it's at the top of the axis, on these shorter time frames, there's certainly room to continue this bullish sentiment if it chooses to going into the close of today. I will note, however, on the hourly chart, there are a couple of things to be mindful of. Hey, Linda, good to see you. The first thing to be mindful of is momentum, right? So momentum's basically at the top of the axis here. Now, it is the hourly chart. On intraday charts, it's a little easier to adjust that axis higher. So that's what we could start to see here. If we do, that's certainly more of a bullish sentiment, and we'll need to be mindful on if we get a couple of red bars in a row that could be our sign of exhaustion. But we do want to be mindful here of that potential exhaustion as well, just because one, we haven't pushed the axis higher yet. So we're right at the top. The second reason why is we are at a psychological level. A mini psychological level for intraday charts is the 25 level, 25 and 75. Of course, 50 and the big round numbers like 4,100 are also bigger psychological levels. But from an intraday perspective, always want to be a little mindful of the 25 and 75. So that's where we're at now. We could start to see some pausing there. The third thing to be mindful of is we're nowhere near support, right? We're hanging out here near the upper Bollinger Band. Now, there are days, just like we saw back here on Wednesday, where you can just trade along the upper Bollinger Band higher, especially on intraday charts. It's not as hard of an issue to do. But as you can see, the next day, for example, we had a nice pullback into the 10, bounced up. Here we had a bit of consolidation towards the 10 before we bounced up. And so we need to be mindful of that potential possibility as well. Hey, Larry, good to see you. Do my divergent bars work well on 15-minute bars? They can. Certainly they can. They technically work on any time frame, but I will say that I personally prefer to use them on a 30-minute chart or higher. Sometimes on the smaller time frames, and I don't look at the 15-minute chart that often, so that's why can't tell you how, well it does on that time frame. But what I've noticed is on the smaller time frames, it can get really noisy, right? They end up printing quite a bit. You technically will get the follow through, but it's obviously not necessarily a big point move because it's a smaller time frame. So I usually leave it more to the hourly or 30-minute chart if I'm looking at it for an entry. For example, here is a nice bullish divergent bar the other day off of the 10-period simple as support. And certainly, if you held that into the close and did it as a day trade, not the best follow through necessarily, but if you did an overnight trade, excellent follow through to the upside there. Here was a bullish divergent bar that made for a bit better of an entry for a bounce up. And right now, we might potentially make a bearish divergent bar. So we'll have to wait, of course, until this bar closes. It's very early in the bar, right? We just printed our first hourly bar. So quite a bit of time until this prints. I also want to be mindful it is a counter trend signal. So personally, I like to look at bullish divergent bars and more bullish trends, and bearish divergent bars and more bearish trends. But if you did, for example, have a bullish trade and you have a nice profit, whenever this looks like it could print, especially when it's up here near the upper Bollinger Band, it's not a bad idea to consider maybe taking some of that profit off the table, especially if you have multiple contracts on. You can always leave a runner to keep going, or if we do follow through with a lower low and a pullback, that can make for a great re-entry to jump back into things. So probably not the best answer you were looking for, Larry, but that has been my consensus since trading with this indicator. And for as long as I've used it, I usually try and keep it on the 30-minute chart or higher. So I hope that helps you out. But yeah, so of course. So overall bullish sentiment, right? Let's go to the daily chart now. The daily chart, like I mentioned, is attempting to turn bullish. We were seeing this convergence of moving averages, but now the 10 is starting to cross above the 30 and the 100. The 30 and the 100 are still basically on top of each other. So if we do continue this bullish move higher, the 30-period simple will start to roll off the 100. That will start to form a stacked up formation, and that would be a bullish trend signal. As you can see, I do have an alert up here at 42.1870. The reason I have this alert set up is because when we zoom out and go back in time, you will see that this is a potential gap range. Back here, we made a gap to the downside on August 19th of last year going into August 22nd. And so the low of that bar right before we made that gap to the downside is 42.18 and 70. So I don't usually trade just off gaps by themselves. I have done that in the past early on in my trading. And I realized, thankfully, very quickly that sometimes a gap can take a very long time to fill. There was a gap I actually traded way back in the day on SPX. That was a gap to the upside. And it didn't fill immediately. I had a trade on it. The trade was a loser. And so I was like, okay, I'm going to track this, see how long it takes to fill. And it took almost a year for that gap to finally fill. And so I don't trade off gaps anymore, but I am very mindful of the levels. So if we do start to get up here to 4,200 to the 4,260 range, which we'll talk about how that's important in a second, then 42.18 could end up being a target that we want to be mindful of overall, with the possibility where sometimes what happens on these gap fills is like this one, for example. We had a gap here at 40.83. That was a gap to the downside. And then when we had that run up going into the end of the year, we barely filled that gap right here off of Powell talking. And then the next day we bounced a little bit higher, filled the gap, and then immediately pulled back. And so that's something to be mindful of about gaps. Sometimes you fill them like this gap here and you just keep going. But other times the gap is like a magnet where it drives the price right into that level to fill it. That's all it's looking for. And then it reverses back down to the opposite direction. The reason why I want to be mindful of this 42.18 level is because of weekly resistance. So let's pull that up for a second here. So on the weekly chart, are starting to get some bullish signs. Do want to be a little mindful. That momentum's trying to bounce up a little bit. Do have a valid bullish signal here, which tells us we could go up and test resistance. But the 4,200 level is a psychological level. It's also right by the 100-period simple, which is this solid orange line for me at 4203.98 is technically where that's trading at currently. And then the ATR trailing stop is at 4260.23. That's the exact number there. And the reason why I'm being in particular very mindful of these levels is because for those of you who have been following along with me for a while, and is my mic giving anyone else trouble? Let me know because I can reset it. Sound garbled. Okay, let me reset the mic, guys. Give me 1 second and we'll try and get that better. Thanks. Okay, let me know if it sounds good here. Hopefully it sounds better. Switch to a different mic. Gotta love technology. Perfect. Thanks, Batman. Okay, and let me reset for the Profit Recycling Mastery Room. All right, switch to a new mic, guys. Appreciate it. Should sound better, at least a bit better. Doesn't have the noise gate though, so if you hear the baby indicator, I do apologize. They're pretty quiet right now though. Perfect. So back to the talk here. Basically, I'll just repeat this for a second, but the levels that I want to be mindful of on the weekly chart is the 4200 range to 4260. 4200 is, of course, a psychological level. The 100 period simple is at 4203.98. So that's certainly going to be a big level. The last time we got up close to that range earlier this year, it held as resistance and then we worked our way back down to 3800. And then the ATR trailing stop, which is right above that, is 4260.23. So as you can see, that gap fill at 4218 is kind of right around those ranges. So I want to be mindful of that. If we do continue with this bullish sentiment higher, it could be to potentially test those ranges, follow through with the gap, and then we'll want to see whether or not we get a continuation higher, or if that's all it was looking for was potentially that fill before it rolls back down. Now, for those of you who have been following along with me on my longer term quarterly analysis, which if you haven't followed along or you're questioning what that is, certainly go back. I do have a YouTube video where I talked about this. I believe it might also be on Twitch itself for those of you on Twitch. Uh, where, yeah, it is on Twitch. So you can just send this out in the chat really quickly just because I have the quickest link for that one. There you guys go. And of course, for anyone in the mastery, you probably already have this, but just in case, there is a recording. And basically, in this quarterly update, I go through this longer term signal that has set up on the yearly and quarterly chart that every time it has printed in the past signals that specifically the quarter that we're going into could see some strong selling to the downside. Now, keep in mind, as a trader, the only thing we can control, truly control, is our capital risk. That's it. Everything else is basically a guess based off high probability due to the indicators that we hold. Now, even though this signal has printed every time in the past, this may be the first time it doesn't follow through that way. And so, because of that, we need to be very mindful of the capital risk that we put out there and understand that we're looking for this overall downturn, but it may not happen. And so, for myself, the second reason why I'm being very mindful of these levels outside of just it being a big resistance level is that if we really start to break higher from this range, that tells me that that quarterly signal that I'm watching may not follow through the way I want it to. And in turn, I might look to start protecting capital on some of my longer term bearish trades that I hold. For those of you that follow along with the $500 challenge, we do have a trade out there right now based off this quarterly analysis. That's a little down. It was actually profitable some last week. So you might have, if you did multiple contracts, taken a little bit of that profit and paid yourself back. And currently, of course, with this bounce up that we had, I'm sitting on a slight drawdown, but I'm okay with that. The trade, for those of you who don't know, is a broken wing debit butterfly. So it's the 3,500, 3460, 3430 puts. So it's far out of the money. It's a 40/30 broken wing butterfly. I jumped into this for $1.30. So you can certainly jump in cheaper now if you want to. But as you can see, like I just mentioned, it's only $1.30 of capital, right? And so on the $500 challenge, for those of you who are not aware of this, I normally just risk $500 at the start of the month. And I teach people how you can take a very small capital amount and be still mindful of risk while growing in an account. And so out of the $500 I have in this account, which I'm doing my challenge a little bit different. Instead of doing it for the month, we're doing it for the first, or technically the second quarter of this year, because this is a quarterly trade. Usually in the challenge, I keep my trades within the month, so that way I can start clean each month. But because this quarterly signal is based off the entire quarter, we're going to do a 500 challenge for the entire quarter and see how much we can grow it within that time frame. And so out of the $500 that I currently have in the account, I've only risked $1.30, uh, aka 130, right? So I have 370 still in the account to be able to trade with. And I love that because that means I don't have my account fully invested. If this trade turns out to be 100% loser, right? If I lose the full amount on it, that's okay because I still have 370 of capital to try and make that up. When we look at the risk versus reward factor on this trade, our max profit potential is the debit spread portion of the trade 40 minus the $1.30 of capital. So we have a 3870 max profit potential if we were to get the pin going into expiration on June 30th, which of course per contract means I have a 3,870 max profit potential. Let's say the signal that I'm watching does follow through in a big way. For those of you who don't know, my more conservative target based on this signal following through and how it's gone in the past, my more conservative target's actually 3,200 in the S&P to trade to the downside, which funny enough is right by quarterly support. Gotta love how those numbers work out with the technicals. So the ATR trailing stop on the quarterly chart is 32.19. The 30 period simple is around 31.80. So right by that 32.15 level that I'm looking at. So let's say it goes completely in the money and we're completely in the money going into the expiration. That's fine. That's why I love debit butterflies, um, broken wing butterflies, that is. Because if this trade goes completely in the money, it still allows me a profit. And the way you figure that out is the difference of spread width. So we have 40 points on the debit spread. We take away from that the 30 points on the credit spread side of the trade, and it leaves us 10. So 10 is what the trade would cash settle for going into expiration if we're trading completely in the money on this by June 30th. And then of course our cost basis was $1.30, so we take that into consideration, and that leaves an 870 profit potential, which per contract is a $870 profit. Not a bad risk versus reward, right? Off of $1.30 risk, it's a 669% return, right? Not bad to see for your capital being put out there. So it's a very low capital risk for the account. I'm not going to blow out the account on this one trade with how much I have invested, and it allows for an excellent profit return. The reason why I put this at 3,500, even though
My more conservative target if this signal follows through is closer to 3,200, is because that's right by the lows of last year. The lows of last year were 34.91. So if all we do is go back down and test the lows of last year, well, it still puts that trade in the money, should still allow for a profit overall. And if anyone caught the start of the session, right, notice how that 41.25 level acted as a psychological level, and now we're getting that stronger pullback. So watch to see how intraday support levels start to hold. If we start to break this 4110 range, then 4100 will more than likely go down to, both as a psychological level and because it's right at 10-minute support and it's right by the 10-period simple on the hourly chart. And of course, if that level holds, that could make for re-entry to play the bounce back up. So always be mindful of your levels as intraday traders, guys. But that one, like I said, is a mini psychological level. It held beautifully, and now we're getting the reversal back down. Um, but that's where we're at with the challenge account. So I will be looking for new trades to potentially put out there. But that's the only trade that we have opened so far for the quarter. So anytime I open a challenge trade, it always is alerted to the Profit Recycling Mastery first. But then I do post it across some of the rooms at Simpler, including the free room. So if you're not signed up for the free room, certainly check that out. And then I also share it on Twitch. So if you follow me on Twitch, you should get the updates where I'll post those alerts. I'll show you, the account, show exactly what I open, the strikes, and I usually have a little notepad talking about the trade and everything like that. And then we'll go over the challenge account and any trades taken each Monday morning, like we're doing now. So I do have a little bit of time left. Let's be mindful, like I said at the start, on market holidays going into them, right? Friday is a market holiday with it being Good Friday. And then, of course, coming out of a market holiday too, a lot of the hedge funds, the bigger boys, they like to take time off. Makes sense, right? They have a free day off already from the market. So let's use some of our vacation days around that, extend it for a really long weekend. And so what happens is it's not uncommon for that volume to kind of get lighter going into the end of the week closer to the holiday and then coming back out of the weekend. In turn, that's what usually can cause these slightly smaller daily ranges compared to normal and what can cause the overall chop to a slight grind to the upside. Now, that doesn't happen every market holiday, but that is often common during market holidays. So don't be too surprised if we kind of chop to get that slight move higher. I will be curious though, because this quarterly setup that I'm talking about, usually when it follows through, this is part of the reason why 4,200 is kind of my line in the sand to 4,260 with those weekly resistance levels, is because when this signal has followed through in the past, like here, for example, this is where that signal followed through in 2008, you can see that the open of the quarter is usually right by the high of the quarter. We don't usually get much higher than the open. For example, in 2008, we opened at 1164. The high of the quarter was 1167, right? Only a couple points higher before ultimately it's sold off and had this bigger range. Back here, when it printed in 2001, the open of the quarter was 1224. The high of the quarter was 1239. And then we had that bigger range of selling off. So we'll see if it follows through the same way. I'm certainly giving this more room than just 20 points to try and move higher because I do want to be mindful that we're starting this quarter going into that holiday week, and I know how those can tend to be. But that is what I will certainly be watching for. And even though I have more of this bearish viewpoint, at least for a bit going into this quarter, I am still keeping my account a little bit more even. One of the trades that we took in the profit recycling this mastery this yesterday into today was APLS. Beautiful gap to the upside. Probably could have held on for a bit bigger of a profit, seeing where it's trading now. But I only had the one contract, so I was happy taking the quick win this morning. Sometimes off these gap moves, like here, for example, you get that immediate profit taking that can bring you back down. But I did mention for those of you in the mastery, if you hold multiple contracts, please consider leaving one on as a runner. And there are two reasons why for that. The first reason is momentum has plenty of room higher, and we're just starting to see the squeeze fire. So that in itself can keep this energy going to the upside. The second reason why is because the price has exceeded the third deviation Bollinger Band, which is this outside blue line for me. And when the price exceeds that level, there is good probability that the next few bars will either one, stay within this range, right, and hang out up here at these levels, or two, it will actually continue higher. Now, I don't know the real reason why that happens, but in my brain, it's like a case of FOMO. People who were short are seeing this and are like, oh my God, I need to get out, right? And then people who have FOMO and see this are like, oh my gosh, I started to miss the move. I need to jump in. And that in turn kind of keeps the price either positioned in this range or actually continuing to the upside. The same thing is true to Bollinger Band snaps to the downside when they exceed that third deviation Bollinger Band. It can sometimes keep the price in that range or moving lower. A great example of this is actually just back here, right? Even though it had selling that bar, we exceeded that level. And then what happened the next day? We stayed a good chunk of that bar within the range and actually continued to a higher high. Once again, still exceeded the third deviation Bollinger Band. So the same thing was true the following day, moved higher. And then the next few bars, we actually started to consolidate some more. That brought us back within the comfort zone of the second deviation Bollinger Band, which is this inside blue line. And then from there, it starts to act a bit more normal, right? As it usually does, meaning it will start to consolidate or pull back into support. And then you watch from there how it acts. In this prior case, we hit exhaustion levels. So it started to consolidate. That allowed the momentum to reset. That allowed the squeeze to build up and then gave us a chance to play this second run higher. So overall, not a bad day. And way to start the week, certainly. So even though I do have that more bearish aspect, basically don't be surprised in the challenge account if I do end up opening some bullish style trade, if there's something that has a really great setup like this that we can take advantage of. And of course, is within the risk parameters that I'm looking for. I do have a minute or two. So is there any last minute question? I will say, as I wait for a potential question, good strategies during a holiday week due to the potential of chop usually are more along the lines of theta decay friendly trades like credit spreads, iron flies, iron condors, things that can benefit both from a directional move as well as chop. Now, those aren't personally my favorite strategies to trade. I like to be a bit more directional on my trading, but that just because I like to be more directional doesn't mean the market's going to listen to me. So just be mindful that those are sometimes good strategies to go with during a holiday week like this. So I don't see any questions coming in. So I will say for my intraday folks, watch to see how 4100 level holds. We're getting some nice pullback on momentum here. So as long as it doesn't cross below the zero line, that could start to set up for some bullish sentiment. If we do start to break the 4100 level, technically this 10 period simple is at 4090, but after that 4073, 4075 would be my next target to the downside. As we talked about this morning, 4025, right, the 25 level and the 75 levels can be many psychological levels from an intraday perspective. And then 4073 is also currently right in line with the ATR trailing stops. So it has a technical support along with that psychological level to go down and play. If we really start to break that level, then I'd be looking at 4050, 4060 has kind of been a price level recently to be mindful of. So 4060 to 4050. And then the 30 period simples down here at 4035. If we end up holding though, and we bounce off 4100, then I'd be looking to play back into this 4125 level. And if we manage to break above that, then 4150 is going to be a bigger target to try and play into to the upside today. So that is my time, guys. Thank you so much for joining me. I hope this was a good start to the Monday week, right? Gives you some insight to how this week might go. Talked about the $500 challenge sum. And certainly, if I see any trades, I will alert them out. As always, may the trade be with you, my fellow Jedis, and I look forward to talking to you next time. Bye.